Good morning, traders. So we're not going to get a rate cut, and the market is no longer pricing in a rate cut in September. So just that fast, one whole day literally changes the whole aspect of everything. I do have the dot plot pulled up here because someone in the live chat yesterday asked me to take a look at it, see what I thought. The median projection is 425, 450. That's where we are right now. You can see that all of the 18 dots are under the 450 spot. So, I mean, arguably, this data here doesn't give us anything, right? And also, this is 25, this is 26, 27 for the year. So this is like a dot plot for the year end. But anyways, the median is 425, 450. That's where we currently are right now. So to say that there might not be a rate cut this year is absolutely 100% true, right? My main thing is that overall, the Fed policy rate that we are in is dovish. It's not hawkish. They're not looking at hikes. That's the important takeaway. But I also honestly believe that not cutting rates again this year could mean that the dollar's going to firm up a bit. It's not going to go immediately back into a range, and we could see alts suffer here. But you can see clearly the expectation is now no cut in September versus a 41% chance of a cut. So, I mean, it's still possible. It's just unlikely at this point. Right now, the one that I'm looking at is hype. And the reason is because it's up 4.14%. Now, there are a couple other ones like Fartcoin this morning around the London session. I posted on on Twitter that there was a long here, but that was before we got heavy volumes, and it worked. Right, I made a little bit of money on that. Was only looking for the scalp. When we come into the New York session, that's where we look to position ourselves for like the main trading day. And you have given back a lot here on Fartcoin. You're down almost 5%. So for me, Fartcoin's not going to be a trade. If we look at the 4-hour chart, not today. I'm not going to be live as long today because my stomach is on the fritz. So I'm going to give you all a couple setups, what I'm looking at, what I will continue to be looking at all day, and then we'll wrap this stream up. It's just going to be a quickie. But you can see here, Fartcoin's already liquidated the last 4-hour candle lows. I mean, could it bounce here? Absolutely. It's been sold off on the 4-hour or been on oversold since here. Now, clearly it can stay oversold. You could get another deep push today and remain in oversold territory. But what I'm trying to say is if you're looking to short altcoins, I think you'd be better off looking for that somewhere else. Like on Hype, for instance, because it's actually up. All right. You can see here you're testing the 50 right now. You got 2 hours and 25 minutes left on this close. So if the markets, alts, and Bitcoins become bullish today, here's what Bitcoin looks like, then obviously these shorts will not work. It's as simple as that. We missed the Fartcoin short. There was no reason to look for Fartcoin shorts this morning. Everything looked bullish. But in the end, it rolled over. It's extremely weak. It didn't look bullish. It was at support, right? So like if you were going to buy a Fartcoin, it would be simply you think it's overextended to the downside. You're looking for a small bounce. That is it. It's not. The trend trade is still down. You're not oversold on the daily or the 8-hour. Well, you just hit oversold on the 8-hour. So you're not oversold on the daily though. You're coming into the 40. So you could see a bounce here, but you got a bounce yesterday. So today could be a big down day on Fartcoin. But it's already so far down that I don't really want to short the daily lows. That's why I said if you want to short something, short maybe Hype, as it hasn't rolled over completely yet. Jasmine's still up on the day. Penguin is still up on the day, but it's already given back half of the daily gains. You're already massively oversold here on the 5-minute chart. It's kind of hard to short these things right at the open since they've been selling off since 7 o'clock in the morning. Whereas Hype hasn't been selling off since 7 o'clock in the morning. It's actually been rallying all morning, and it's just now when we got the PCE data, it has started to pull back a little bit. So, maybe look for a high day run and then look for a rejection. Don't take too many shots at it though, because I obviously don't know what's going to happen. The dollar can continue to go up, or it could pull back right now. We're not seeing it pull back right now. We're actually seeing VIX with another gap. So you could see a gap fill on the VIX. Where is the VIX? VIX. Give me the VIX. Here's the VIX. So it looks like you're trying to do a gap fill right now on the VIX. So be careful looking for that. So if you get a gap fill and then it starts to reject, maybe then you could look for longs on the S&Ps. You're probably not going to do much liquidating today on the S&P. I mean, yesterday was the liquidations. Yesterday we got, pretty well into last week's range, basically testing the midpoint of last week's range. So we kind of took a long scalp on this. Maybe give this a little bit of time, see if it wants to find a little bit of support. Trying to get long right at the bell is probably going to be costly. But this is what it looks like with all the data. Here is the rate decision, and then it instantly went right back up and became bullish again. You set fresh all-time highs on both the NQ and the ES. So clearly coming into today's session, risk is to the upside. But with that news, Bitcoin is kind of not loving it, right? Bitcoin is a more risky asset class than the ES futures. And you can see Bitcoin liquidated yesterday's high and has since pulled back. Here's yesterday's high. You ran a 15-minute candle above that and rolled over, and you never went back. That doesn't look great. Here's your weekly VWAP. So this is the area where we want to see it hold support if it's going to. If it doesn't hold support here and it starts to continue to push, then there's a good chance that you go make a fresh daily low, which is going to be right here. So that's your low of day. If you don't need to dirty up your charts like this, if you don't know what the low of day is, just put a star next to the session volume profile, pull up the box, and the box shows you the entire day's range. It shows you the open, which is here. It shows you the high and the low. So if you got this box pulled up, you can see where the value areas are, where the point of control is, what is price doing with that information. And it looks like it wants to put in a fresh daily low. Current positions that I have open are on the alt scene up here. You can see I shorted Bonk this morning when it was trading up into the 40. Sorry. Remember, I look at the 40, 50, and 60 on the VIX because or on the RSI, as that tells me where momentum is. So anytime we're retesting the 50 or the 40 after coming out of an oversold area, that is often a short opportunity. So essentially, all I did was waited for us to liquidate this candle's high and then wait for it to start to pull back, and then I shorted it. That's all I did. That was a strat. The trend is down. This is a bounce. This is a bullish bounce. A bearish bounce. So I shorted it. I'm holding this position. I've not taken profits yet. This is what I have for right now. If it continues to go down, it'll get bigger. And then here's the hype short that I just took a little while ago. Notice where my positioning is. Right at the previous 4-hour candle's high. Because as far as I'm concerned, if you get above that and continue, I don't want to be short. But if you get above that and reject, then I do. Because we got the same scenario here only yesterday. Oh, it did get into oversold. Nope, that's the 40. Sorry, oversold's the dotted line. So we just traded down into the 40 here, bounced back up into the 50, kind of rejecting up in here. So I want to be short, as this is just another bearish bounce. All right, that's it. That's the strategy. Like, so hard, right? It's not really. And with dollar strength, it's going to help us. I will show you that here on the shorts, on some alts, not all of them, guys, not all of them, only some. Some are going to get hurt, some won't, right? Look at Fartcoin and just add the DXY with a new price scale and look at it. You can clearly see weak dollar, strong Fartcoin. Dollar finds a low, Fartcoin puts in a high. Fartcoin rolls over as dollar pushes. Dollar pushes, Fartcoin rolls over. So find this scenario. As you know, you're not getting a rate cut. So I don't know how much was already priced into the dollar. Rate cuts mean weak dollar. Rate hikes mean strong dollar. No rate cuts is also firming up the dollar. So if you're going to see upside continuation on the dollar for today going into tomorrow, which you could because you're above last month's high. So you've already liquidated a big level and you're getting upside continuation. Let's go look at just the DXY. You can see this is how I analyze price. It is as simple as that. So if I'm looking to be bearish on the dollar because in a sense, we were actually looking for the dollar to bounce here and break out of that descending wedge, but that's neither here nor there. We were looking for the breakout. We got the breakout. Here is June's high. So let's get rid of all this crap. Let's get rid of this. Let's get rid of that. All of it. This is all we need. This is the previous month's high. So if I'm going to look for DXY short side continuation, I mean, it's been getting killed all year. If you're just now looking for dollar shorts, in my opinion, you're late. You're extremely late on that trade. We've been calling out dollar shorts since December last year. All right. We wanted to go into the dollar short this year. That's why I was long euro for Q1 2025. I nailed most of that move. But anyways, we're looking at this would be a liquidation point. So if the dollar was going to pull back, if it was going to remain on the short side based on potential rate cuts coming up in the future, then this is as far as we would need to see the dollar go. It should have liquidated and reversed. That's what it should have done, right? Now it's been up extremely hard since last week and every day this week. So it could pull back today. If it does, then some of these alt shorts might not work, right? So you just have to keep an eye on the dollar today if you are looking for short alts. If you're looking for long alts, you need to be looking for long alts that have a purpose, alts that have meaning, that have an actual use case. My favorite one would be Ethereum first, Solana second, and then Hype. All three of those have a valid use case. All three of them have utility. They generate income. If they generate income, then we like them longer term to stay relevant as long as we are in an alt season, right? If we get out of the alt season, then I don't like any alts. But Hype might be something like Ethereum or something else that trades under its own merit, depending on how much money do they make with their volumes, how much money are they taking from the profits they earn and rebuying up their token. Things like that will give the asset value. You generally don't want to short things like that. The only reason I'm looking for the short on it today is because as long as it's trading under this 4-hour candle high, it's still in this overall downtrend. This little leg of price right through here. Now, if I pull this chart out, you can clearly see that we were extremely bullish going into the very first part of July. We're at the end of July. This thing pulled back around the midpoint of July, not the midpoint on the chart, the midpoint on time, like around the midpoint of the month as far as time. It started to pull back, and it has been pulling back consistently since then. And that's been in a choppy range here. But when we put in this leg lower, we also formed an uptrend here in the form of a channel. Well, we broke down. So right now, this could be putting in a bear trap reversal. So this high is the only point that I want to be short from. I don't want to be short higher, because higher could mean it's going higher, right? So if it stays under this, then I will short it. Above it, I will exit the short. Got it? I will no longer be short, because I will be looking for a pullback to buy. The last time hype broke a downtrend and put in a bear trap, it absolutely rock and rolled to the upside right here. Right? It broke down. We did not get downside continuation. It got back up into the range here, and then boom, it exploded to the upside. So we will want to change our bias for something like this. If the dollar starts pulling back today, if it's ran up high enough and it starts to pull back, then we could look for this to potentially be getting ready to rock and roll to the upside. That is, of course, if alt season continues. Now, your current total 3 and total 2 charts, total 2 still in a long-term range here. Longer term, just meaning 2 weeks. 2 weeks, that's it. You're trading inside last week's range. So as long as you're doing that, you have to be very quick to take profits, because you are an inside candle. That is the very definition of a choppy market. You are choppy on the weekly range. So you could find reversals just inside and around daily levels. Daily high, daily low. As long as you're under yesterday's close, then total 2's threatening more downside. As long as you're above yesterday's close, total 2 is threatening upside. Right? It's just a range bound trade. It's so you have to trade, you have to deploy those kind of strategies. And your total 3 looks exactly the same. You're trading inside last week's range. You did breach the low. So this is more threatening. However, this one only excludes Bitcoin. It excludes Bitcoin and Ethereum. So these are just alts. No Bitcoin in this, no Ethereum. And you can see this one is weaker. It's weaker than the one that has Bitcoin or Ethereum in it. So you have taken out the low. So as of right now, this is a trending candle. Even if you close up in here, it is still a trending candle. And which way is it trending? Well, it took out the low. So it's a trending candle to the downside. It don't always play out like that. We had a trending candle to the downside on the Japanese yen last week. And, well, wait, did we? Currency futures, Japanese yen. No, we had a trending candle to the upside last week on the Japanese yen, and it broke out to the downside. So, yeah, trap, right? It was a trap. That's why I had a near-term bullish bias coming into this week, looking for it to go back up and take out that high. But as you can see, my analysis is failing. Something to take of note here, if you're still looking for Japanese USD JPY shorts, be careful. You've already taken out the April low on the Japanese yen, which is important because the April candle is the candle we were trading inside of. You are now trending back to the downside. You are no longer in a range. So could today be a trap? Yes. Yes, it could. The only way you'll know that is if tomorrow or Monday takes out this candle's high. That's the only way you'll know. So instead of trying to short USD JPY all day today, just wait. Because if this isn't a trap, you're going to get wrecked multiple times when you can simply wait for the trap to reveal itself and then look for a resistance area to get short. All right. So for now, as far as I'm concerned, the USD JPY trade short has been invalidated. You have extreme yen weakness and extreme dollar strength. Oops. When you have that, that is a recipe for upside continuation on this market. So your yearly trend to the downside has shifted. So today will be very, very important for future trade ideas. So like this trade idea was based on the yearly trend. Looking at this as a bear flag, okay? But someone asked in the Discord, isn't this bullish? The answer is yes. If you're looking at this week's range, it is bullish. Absolutely. When you're looking at only a few days of data, like if you're not analyzing the overall trend of the market, if it's been a choppy market or it's not relevant to analyze the entire yearly trend for a trade setup, you're only looking at the last 3 days of data. Well, then in that scenario, you would revert back to using your daily exponential. If the daily exponential is under price, then for the near term, price is bullish, but only for the near term. Right here is where that was being threatened. You see that? So in that scenario, if you wanted to look for longs USD JPY based on the 3-day analysis or this week's analysis, then yes, you could have been long all week. So, but when I put out the trade idea for the alert, it's a literal year trend. We don't really care what's going on today, yesterday. I mean, of course we do when we try to get short and it gets stopped out. Of course we don't like that. It's not cool, right? But how many times are you going to eat a stop before you decide that it's no longer working? Your trade idea is no longer valid. That's the whole point of letting April's high invalidate the short thesis unless it reverses back into the range. And then that's when things get dicey because you're failing, but tomorrow you could be well above it, right? We never know what price is going to do. We're not trying to predict what price will do. We are managing our money at specific areas on the chart based on trend following strategies. That's what we're doing here. So like when I'm getting short or buying something for a scalp, I'm not trying to predict what price will do. I'm taking my overall analysis or near-term analysis. It just depends on what I'm doing for that day. So yeah, we could literally see the dollar pull back today. No rate cuts coming. No rate cuts coming. But you're at the 100 exponential moving average on the daily. You're testing the 21 weekly exponential moving average right now. And if I ain't mistaken, okay, the 100 AMA was way down here. You've broken well out above that. So that's not going to cause any kind of resistance at all. But this is a breakout of a descending wedge. Right? There's your descending wedge. That it's a breakout. You could even take it from here and look at it like that. It's still a breakout. You've got a 3-drive lowering formation or a 3-drive bottoming formation here. This same pattern is also known as Wyckoff accumulation. So coming into this week, we were very, very hesitant, knowing that this could be the low for the very near term on the DXY. That's why I said all week, I'm not looking to take more than 2 or 3% loss on that trade idea, because this could be the near term bottom. We could, especially now since the rate cut is less likely to happen in September, we could literally see, where is my brush? Hello, where are you? There. We could see the dollar, oh my God, and it's black. We could see the dollar do something like this. moving on for the rest of the year or until we get a rate cut. We know this. We know this, right? I know we're not going back to the yearly open, not on the dollar. This move was priced in based on rate cuts. So they're not going to cut again anytime soon. So what do you think the dollar is going to do? More than likely, it's probably going to find an area, top out, and create a range until you either get a rate cut or a rate hike. And the Fed has made it very, very clear. This is the only thing you need to listen to right here on that whole live stream. Hang on. I'm popping all kinds of buttons here. 3756. Right here. Let me kill the music. Well, first let me kill the commercial. Gotta love YouTube and its commercials. Give me 1 second here.
Of cutting rates, and what was the case against that at the meeting?
Sure. So, we have an economic go around where people talk about the economy, and then that's yesterday, and then today we have a monetary policy go around all the way around the table. Everyone gives their views. So, the discussion around policy was the majority view was still what it has been, which is that inflation.
The majority view, there's like 18 Fed officials, 18. They all make a vote. That's how Fed policy is situated, right? Now, Jerome Powell's vote counts for a little bit more. He usually is the swing vote, if you will, but they vote on policy. So the majority was stay put, right? And I think he goes on to say that only two Fed officials voted for a cut. Only two. So like if over half of them vote for the cut, then they'll cut. But just continue to listen to him, because literally this sentence explains what he's doing and what they're going to continue to do.
Is running above target. Maximum employment is right at target.
So inflation is currently running above target. Their target is 2%. They want it down. It's up. It's not high, but it's up. We are currently in restrictive territory still with Fed rate cuts. So they want to leave it alone, right? Until inflation comes down. So the Fed rate cut is for high inflation. If there's high inflation, they will hike rates. If there's no high inflation, then they cut rates. But they don't cut rates unless there's high unemployment, which we have low unemployment. So we're kind of in this area where we got really good growth, right? GDP just came out and it was better than expected, above 2%. It's good growth. 2% growth is good. So anything higher than 2% is good. You got good growth. You got good job number, no high unemployment. They don't have to cut. They literally don't. Markets are at all-time highs. So literally everything is situated absolutely perfect for them to just chill. They don't really need to do anything. And in my opinion, that's what makes Jerome Powell a very good Fed chair, because he doesn't jump to conclusions or make rational decisions. He doesn't use emotion to make judgments. He literally uses data, and being data dependent means so will we going forward. This changes things for us. Also, we were expecting rate cuts in September. We had a super bullish bias. Now we're not going to see a rate cut potentially in September. So we would look for the dollar to firm up a little bit. This will, or should, I should say, not will, it should put pressure on anything paired against the dollar, right? So your Forex pairs and stuff like that, probably going to see a lot more range-bound activity once the dollar stops trending back to the upside, which it could just by coming up here, or it could here. We don't know where. But when we build in a range, we will know. We'll know a little bit more. But for your meme tokens, for sure, as long as you have strong dollar, you should be looking for shorts. All right. So That's what we currently got. I don't know how much it's going to affect Bitcoin or if it would. So with Bitcoin, my analysis remains the same. As long as the VIX is under 1721, I have a bullish bias on Bitcoin. I don't care about the price. Anything under $17. If you are under the yellow line, my near-term bias on Bitcoin and ES is bullish. We are well under that price. So, of course, I have a more bullish bias, right? This is the volatility index. Yeah, I know it's not Bitcoin's volatility, it's the ES volatility, but Bitcoin trades as a risk-on asset class. It's been doing it its whole life. If we're bullish on risk, Bitcoin's typically bullish, right? The one thing that could hurt Bitcoin's breakout potential would be a very strong dollar. But if Bitcoin is stronger than the dollar, then it will still trend up. So as long as we don't have any high volatility in the overall risk markets, being the S&P 500, then my overall bias is bullish. So there's that, right? So you be looking to buy supports on pullbacks. You buy support on pullback. You just made a fresh daily low and you rejected. So this kind of price action will more than likely hurt this short, right? It will more than likely hurt it because this asset is trending up on the day. So bulls will more than likely want to be a buyer on this today. The dollar strength might not affect this one as much as it would affect something that has no value other than being a speculation vehicle. And that is all Fartcoin is. It is a 100% speculation vehicle. It moves a lot, therefore traders trade it. If it did not move a lot, this thing would have less volume than Book of Meme does. Book of Meme moves a lot too, but not always. Fartcoin pretty much since alt season's been here has been moving 5 to 10% per day. So it is a trading asset. That's why it's so popular. But as far as trending mechanisms go, it won't, right? It won't be a great trending asset class because it has no meaning. Now, it can trend if you get in a massive short squeeze, which you could, because everybody thinks that this doesn't have any meaning, wants to short it. So it could absolutely get in a huge short squeeze. And if you get into something like that, then it could trend up for months, right? It could. But generally speaking, we want to use this as a scalping vehicle only. We're only looking to make a few percent in directional moves and get out. That's what we're using it for. That's all it's used for. If you want to buy and own, buy and hold, you want to buy and hold something like Ethereum, Bitcoin, Hyper, maybe XRP. I don't know what XRP's use case is, but if there is a valid one, there has to be almost, because it did really well. It's still doing really well. For the month of July, it's really doing good still. You're still up on the month, above the midpoint. That's good. That means you're hanging on to the majority of your monthly gains. That is good going into next month. It does not mean that it will continue to keep those gains. I'm just saying it looks better than something like Fartcoin, who literally has given back all of its July gains, right? So those are the things that you would be better off buying and holding. Penguin is in the process of being in a short squeeze right now. That's why you exploded to the upside. I don't believe this has any value at all either. I think this is tracking an NFT, and we all know what happened to NFTs. they like only 10, like a very small number, like 10% actually paid off, profitable. The rest of them went to ZERP, right? That's because there was such mania at the time. The whole markets were, every market was bullish. You could just simply pick a coin, any coin, buy it, and make money at that time. We're not in that period yet, but we will get there if this continues to rock and roll to the upside. If your bullish mania continues, then we could see these things do that. But for now, it's let's just pull it up. Let's ask Grok, is it a meme token? Is PNGUUSD a meme token? There is no crypto. Yes, there is. It obviously doesn't know about the perps. It is considered a meme token within the crypto space, primarily due to its association with the Pudgy Penguin NFT project and its community-driven viral banding. However, it also has utility features, so it does have utility that set it apart from purely speculative meme coins like Fartcoin or Bonk, right? But Bonk also has that news with the like Doge, Shiba Inu, like things like that. Zero use case. Zero. Those things we want to short when we have strong dollar. How is Doge performing today? Well, there you go. So it's losing its July gains right now. So as long as you're closing daily candles under 22210 on Doge, you can short this. As long as you're closing dailies under the 21 exponential on the near term, you can short it. Would I short it right now? No, because it's at the low of day. Yesterday we had a big move because yesterday we had big news. We'll have big news tomorrow with NFP. So I wouldn't be looking for a huge range today. I would only be looking for about that much potential move in the daily range. Right? And it's already there. So the move has already happened, is what I'm trying to say. You've already missed any potential profitability in the asset inside the daily range. Now, longer term, there could be a bigger move here. So if you want to go into it with a very small position size, levered up, as long as you can get your stop above yesterday's high, and you're willing to make that wide stop be 1 to 2% loss only, then absolutely you can short it. Absolutely. Right? So your entry would be here, your stop would be here, your take profit would then be down here. It's called a swing trade, right? But the loss is still only 2% max. Like, you're not trying to get rich on any single trade. But for a day trade scalp, an intraday range, there's no way I would short it. Because just pull up your box and it'll show you exactly what you got, where you are. So here's your box. That's your daily range. Where would I short this to? You know what I mean? Like, what would I target? The lows of day is what I usually target when I'm shorting something. Right? I can't target the low. We're at the low. So I can't short Doge. But hype, we're still at the highs. It has use case and is valid. though. It does look like people do want to short it as your volume is building up here. But remember, if Bitcoin stays strong and your dominance ultimately, look at that. If it ultimately rolls over, then hype will likely liquidate all of that volume to the upside, and you could get a big move higher. But if it does start to roll over here and get some nice big expansion candles deeper into the daily range, then we'll feel better about holding the short, clearly. All right? But that's all I'm ever trying to do when I'm scalping something. I'm scalping inside of its range. So, yeah. And you're above the monthly midpoint as well up here. So I don't love the short because of that. The short would be better working on your weaker asset. So bonk, it's already at the lows, but you can see how it ran up, set a high day, and then came right back down to the daily lows. This is what I'm looking for. This is what I'm trying to capitalize on when I'm taking short trades on a daily range expansion. Nothing more. Like, nothing more. Just to the lows. What's W doing? It's given back its entire day's range as well. Now, penguins have not yet. So penguins actually does have a little bit more of a downside target. But the thing is you're going to be taking the short after it's already moved substantially off of the highs. So maybe wait for it to get closer to the midpoint of the range and then see how it acts up in here. Now this VWAP is not today's. Let's get today's VWAP up. Oh, here's your volume weighted average price, roughly around the midpoint. You have the weekly volume weighted average price for the entire week's range up here. So maybe if you get a spike on pudgy penguins today, while we're not live, up into this region, maybe then you can attack it looking for this to roll over for the rest of the day. Not down here, as that would give you a much better risk to reward. Okay, so this one will stay on watch all day for me, all day long, and so will hype all day long, because if it fails, and I'm going to hold my short. This white line tells me if I'm getting in or getting out, and I'm not getting out yet. But if I get something like this above that, then obviously I'm getting out, right? Now this trend line down here, I don't know what that is. That's the bottom side of that trend line, isn't it? Yes. Yeah. So literally you have a daily bull trap kind of going on here. Or not a bull trap, but like this would have been a bear trap if it closed under support. It never did. So this isn't a legit trap candle. But it did close under the trend line, right? It's not a perfect trend line or a beautiful one. But it did break and close below the trend line. So the fact that we've taken out yesterday's highs is suggestive that it's looking for further upside, not downside. But the strong dollar has been affecting its gains. So if the dollar weakens, I assume hype, we will have a bullish bias on hype again, right? Right now, today, though, we don't. Until the dollar weakens up a bit, we have to keep the bias legit. So let's put the dollar up here and just so you can see what I'm talking about, right? So you did have a period here where the dollar weakened and this basically traded sideways. So if the bulls were really serious on this at daily support, they defended it well, right? They did ultimately defend it. But as the dollar was weakening, this should have been able to firm up. This should have been able to break out and get upside continuation. But then the dollar stopped going down on this day, and this topped out. Your dollar starts to expand, you break down here. Now, you have not been able to break down in this wedge or in this channel, even though the dollar has firmed up. So that could indicate, it does indicate that you have big buyers soaking up the sell orders. So anybody that's literally been trying to short this thing under 42.80, they are stuck. They are stuck. So today's a very important daily candle for this asset class moving forward. If it closes here or higher today, this will be a long going into tomorrow and Saturday and Sunday for the long scalp, right? If the dollar weakens, pulls back, we will have a super big bullish bias on this. Very important stuff. Very important stuff here. So these sellers, they should have been able to get a deeper push, but they could not do it. That just tells me that buyers are coming in here and they're buying up every dip they get. Today, you're seeing that reaction. You're seeing it in real time. Like, this is an hourly expansion to the upside and a close above resistance. Since you put in this candle's range, you've had 2 hours, 1 hour and 15 minutes that the bears have not been able to get this thing to break down. This is threatening shorts. This is a bullish pattern. A bullish pattern. A bearish pattern would have put in an open and then we would have pushed. Then we would have gotten something that looks like this, trading back up into this candle's range. And then we would have wanted to see another expansion candle. This is consolidation. This is consolidation. So if it doesn't break down soon, I will exit my short trade just for the hell of it, just because it isn't working. The longer it doesn't work, the less likely I am right on the trade idea. The less likely that thing's going to roll over. With shorts especially, because shorts, when you're right, they move and they move quick. To be fair, you got pretty much the same kind of construction here, but this is your 10 o'clock candle. So you were chopping sideways for 3 hours, but you did ultimately close this candle under the midpoint of this candle. So that would have been a good signal. Hence the reason why you got the breakdown here, because once this candle traded back up to resistance, that is when the bears attacked it. They don't want to attack it when it's putting in a formation like this because it looks like the bulls are in control of it. So the shorts were actually anticipating a break to the upside here. But when this candle took out this candle's midpoint, this candle opened, traded up, and the shorts hammered it at resistance. Boom. So this candle needs to cut loose and close under the midpoint here. Then on the next hourly candle, if you get an open, which you will, as long, time moves on, so you will get an open, you want to see it trade up into resistance and fail for a potential breakdown. So I'm not getting out of it yet because my trade isn't being threatened. But if it doesn't give me some kind of signal soon, I'm gonna have to get out of this, right? And then Bitcoin kind of had this crazy move here. It looks like it's rolling back over. This is to draw liquidity in, guys. These wicks like this, It's literally just a draw in liquidity. It's emotionally triggering people to take trades. You got people that are looking to be a buyer. You got people looking to be a seller. And it's just basically smoking both of those people. The impatient, if you will. Those guys, they're getting beat up. Getting beat up. But yeah, if Bitcoin rolls over, that'll definitely help that hype short. So there's still a potential setup here on hype to the downside if you want to take it. Jasmine's still up on the day. Penguin is up on the day. But they're not really giving us an opportunity to short. XRP, no short there. No short on Doge. No short on Litecoin or Comp either. Damn it. Or Solana. It looks like the short came at 5 o'clock in the morning. I just happened to be awake at that time. But the bonk trade for sure I'm going to hold today because it's looking good. I'm going to hold this this could have been the correction here. So I'm going to hold this for a one time frame aspect on the 4-hour chart. I'm holding this for something like this. Hopefully by the time we get to the end of the day's candle, we got another 4-hour expansion. We'll get one in another hour and a half. So at noon, we'll get a new 4-hour candle. Hopefully that one puts in another downside push, and then we'll get one more. You'll get one more 4-hour candle going into the close of the day. So what I want to see out of bonk is a close, and then another push up, and then close, and then close. That's what I want to see. I don't know that I will see that, but this is a decent pullback. So maybe we can. So next 4-hour period, wherever this candle closes, you will have a potential short entry here. So just because you can't short it right now, it doesn't mean there won't be an entry later on today. There likely will be an entry later on today. That's how these candlesticks work. Most of them do put in wicks to the upside. This 12 o'clock candle did not. It opened and went straight down, to be fair, but most of the time you will get another retest of something. That's to lure in the low buyers, right? It's to lure in the people who think this is still bullish. The people that don't analyze trends based on yearly and monthly trends. If they're not analyzing this like that, this still looks bullish to them because they're looking at all this data. Like they're looking at this. So to them, this still looks like a bull flag. They're not paying attention to what day of the year or the month it is. They don't care. They don't care at all. So they're just buying every low. That's a terrible place to be, too. Occasionally you will be right and you will catch the low, but you just won't catch a significant trend. Yeah, Penguin's looking good. This is just the week range. So you've lost the 50 on the weekly range, and the 50 on the monthly range is way under us. No, it's not. That's the monthly range. No, that's today. I'm sorry. I'm looking at this all wrong. Where did the monthly fib go? There it is. I had to get out to the daily to see it. So this could still be bought down here at the yearly open. I don't know that it will be, but we'll see what happens. I would love for all season to continue for another 4 months, 5 months, because It's so much easier to just buy it and let alt season continue to wrap. And you don't even have to get in like a lot of trades. You can just get in 2 or 3 and just hold them and make moolah. Make that money, honey. W was one that I was short yesterday, but look how much of a push it gave. I had to close that one. Ultimately, I could have held it. Or was W the one that I re-entered and it brought my cost basis down? I think that's what was going on. My cost basis was brought all the way down to this candle's high. So when it closed like that yesterday, I said, screw it, I'm getting out. And I'm glad I did, because I would have gotten stopped out. I was seeing in hindsight, me exiting that position based off of what this candle did was the right move. Because I would have made a loss. Never let a green trade turn red. That's on you guys. You never have to let a green trade turn red. If you do, you're doing this wrong. Especially for scalping. Like if you're a day trader, you should never let a green trade turn red. Ever. You're just trying to scalp a few points out of the intraday range. You're not looking for a freaking 8-month hold on a day scalp, right? I can't understand why people let shit go against them. You don't have to do that anymore. Let's see, what do we got up here? But here's the thing. I don't like looking up there because those tickers say they're green. Like, for instance, Jasmy's up 1.84%, and I know that's not right because I have Jasmy right here, and it's only up 0.5%. So I don't understand why. What was I just looking at? Damn, dude. Oh. This sumbitch is taking out June's open. This sumbitch. Oh, okay. That's why. June's open is higher. I was thinking June's open was under July's open, but it's not. It's not, but it's almost given back all of its July gain. This doesn't look like alt season to me. I'm sorry. Yeah, this was a nice alt season move. But this is 1, 2, 3, 4, 5 months of price action. It's literally been chopping sideways for 5 months. This is what alt season usually looks like. Not this. So clearly you have some lovers and losers, right? Some of them did perform well for the month of July. AVAX did. It's still holding gains. Not much. AVAX is getting ready to be a short. Because it's the midpoint of the July gains. Not today, though. It's already moving. Most of these are already moving. Balancer still up on the day. So why is Balancer still up? Balancer's bearish on the year. Bearish. It's up on the quarter, but we're still in the first month of Q3. We're still in July. We'll leave July tomorrow. So tomorrow will be the fresh monthly open. Woot woot. Yeah, my favorite time to trade because I'll probably be shorting Balancer tomorrow. More than likely. Boom, bitches. We be under that midpoint. So tomorrow, we probably gonna be bearish on any move up on Balancer. That will actually happen tonight at 8 p.m. So even though I'm in New York or I'm in New York time zone, I won't be in August yet, and I will have the August Open. So the August Open will be at 8 p.m. tonight, my time. That is when I will be looking for a short on Balancer. Potentially, actually, Balancer could be a short right now. Yeah. Yep. Ooh, no, not yet. What is this? Is that a wick? That damn sure is. I thought that was a trend line. Yeah. Yeah. I like this lower, guys. I don't even care really that it's at the low of day. It's not really at the low of day. It's up 1.27%. It's just a slow mover. It's a slow mover. These are 4 hour. Nobody's trading this. First off, that's why it's not getting nuked right now. This is a very sloppy chart. Look at these freaking candles. That's a 1 tick candle on a 4 hour time frame. Nobody's trading this, so be freaking careful if you do. Make sure it's got volume on your exchange over 1 million. Let's see what it's traded on weeks. I'm gonna pull up BAL. Let's give it a look, see. We want to look at two things. We want to look at 24-hour volumes. We got 2 million traded, so that's good. And we got an expensive funding rate that is paying shorts. Good. If this thing rejects at one spot 323, I might short this too. If it gets back up to one spot 359, I definitely will short it. So it'll just depend on what it does on an intraday basis here. I mean, on an on a 5-minute chart. Mark out supply and watch it. As long as it fails to close 5-minute candles higher, I can short it. I would just put my stop like up there, because if it gets up there, then I don't want to be short until resistance, which is further up, right? Because I know if I'm right on this long term, whatever I lose in that very quick amount of time, I will make that money back. You best believe that. So if we're closing 5-minute candles above 132, then just get out and then wait for 135 to be retested. But this is where you can take the first attempt on the short. Absolutely. For the month of August, this thing's trading under the weekly midpoint and way under the monthly midpoint. Or we didn't get a monthly midpoint. Oh, that weekly range is also... No, got it. That's the monthly midpoint. So this midpoint is the monthly midpoint. The weekly midpoint is way up here. So the fact that we're so far under the weekly mid, it doesn't matter. The fact that we're under the monthly mid matters. Matters huge. Because looking at this on a monthly basis, well, you're still above June. So to me, that really don't matter. Because May was the big candle that most everything was still trading inside of. And you're back in May's range. So May is where you need to hold bullish momentum. Not above June, above May. As the next liquidation point would be here. March's high. So the fact that it lost that means this might be a short opportunity. We'll see. We'll keep an eye on it moving forward. So that's Balancer. Throw that one on the watch list. I'm not trading BAT. It has zero liquidity. That's dominance. Cheddar. Chili's. Cheez-It. It's Chili's. This thing didn't even really get an alt season either. See, when it's like this, though, it's really hard for me to even trade it because it can just get a short exhaustion spike. It could run you right over and just totally take your head off. We'll see what it does here, though. I like it as well. Lower. Comp, I loved its volume signature for this month, but it failed. It failed the breakout. It failed to hold the breakout. So, no longer love it to the upside. It had a lot of volume. So I was thinking that we could get a breakout, but it lost interest. There's volume in here, especially the last 5 weeks. Really big volumes in these 3 weekly ranges here. So even though this one is under the monthly midpoint, it's still, well, no, not really. I mean, you're bearish on the year. It is what it is. Yeah, we're in last week's range still, so let's mark last week's low. So as long as we're above that, it's kind of dangerous to take the short because of that volume signature. So you had a ton of volume on a downside week, and then the very next week you had just as much volume on a bullish week, and then you got upside continuation. Oh, this is still inside the 786, and since it's inside last week's range, we have to be careful because this could be a buying op still on comp. That 4-hour candle does not look like a buying op, but it is literally right at the buying opportunity. It's lost its bullish momentum, though. Even on the daily today, it's losing it. It lost it yesterday. To be fair, you're getting downside continuation today once you get under yesterday's low. This is inside. You're trading inside yesterday's range. So it would need to push on beyond 44.71 for downside continuation. Then I would probably say, yeah, the shorts probably got it. As long as you're up in here, this is a buying opportunity on compound. Just based on the volume signature and what we got going on here. Doge is everybody's fave. You're under it. Same scenario. Down to the 786 is a potential buying op, but still, I do love it. As long as it's under that, I like it. I just don't like it when they're trading so close to the previous week's low, because it could reject there. So just watch those weekly lows as well. That's about all I'm gonna keep on watch. I got Doge on the watch over here, so I'll keep that on watch. Compounds on watch, and then Balancer. Balancer is my favorite one out of all of them. I don't like the liquidity. That is not an L. Let me pull it up on, let me see what Binance does with it. I don't want the premium, I want the that's BAT. You mean, they don't even, Binance doesn't even have a perpetual swap contract. This is a premium index. That is not the futures perpetual swap. Yeah, it's inside last week's range. Not great. But still, it looks okay. So maybe I'm wrong on this. Maybe I'm wrong on this. This is too deep on the weekly range. It's still inside last week's range. This is just a choppy inside candle. It looks good on the near term charts. But that's, you see this wick and this wick? That's, you'll get shit like that. See, here's last week's close. We'll just mark that one line on this chart and then go back into the 4 hour. Boom, boom. See that? Boom. That kind of stuff I don't like. It just makes it too hard to trade it. But I mean, I'll keep it on watch. I ain't afraid to short it. I'm making money. That's my job. It's just not a fast mover. Fartcoin down 6%, so you got downside continuation on Fartcoin. 5-week lows. Literally smoked the intraday, yesterday's low. That's yesterday's low. From the news. Damn. What's up, Lifestyle Media? Good morning, traders. What's up? Good morning. We are on that DXY bounce in the Discord. Yeah. The thing is rocking and rolling today. You just liquidated, you also liquidated April's high on USD/JPY. So above that invalidates the short on that pair for me. Until it either shows me that it's rejecting hard or something, I have to stay off of that. This did ultimately fill the gap, and you did get a bearish reaction. So if the ES is going to reverse and be bullish on the day, you need this to stay the highest closing candle in the daily range. Maybe watch the 1 minute, but it's so ugly. Just to make sure you don't get faked out. Because sometimes you'll get a higher 5-minute close, but on the 1 minute chart you won't. But I want to see it roll over from here. And it would be perfectly within the context of being in an uptrend on the S&P 500 as you're testing Monday's midpoint. That's where we rolled over yesterday. So if we pull up the SPX 500, pull this up, put on this indicator here. What's it doing? Not losing frames, so I'm not exactly sure what's going on here. Wrong one. Here we go. It's still thinking. That indicator is still thinking. What is going on, dude? Let me just make sure it's not, something ain't going on with me over here. There we go. Yeah, it's not my internet. My internet's good. I'm well over 100. Oh wait, it did slow way down. So I got 65 megabytes to download, 14 uploads. So we should be good. I don't understand. But here you go. Yeah, 13.7 on the upload. As long as you're over 10 on upload speed, you're good. So this could be support. Could be support if the VIX stays rolling over. The VIX continues higher after it filled that gap. If it continues up, then this will continue lower. But those are the major levels that I would be focused on for opportunities. Not all of them. I would pick one. All right. And anyway, we don't need that. Bitcoin giving us another lower push here. What did Tesla do today? I haven't looked at Tesla. Damn it. Tesla would have been a difficult trade right out the bell. Not really. Nah, it wouldn't have been that hard. I wouldn't have loved to short it here because it was a higher close, but it was within this candle's close, so I could have. I just would have shorted it and then risked above this point. Once this candle closed, that's 15 minutes of open. And then just short the open of this candle. And it would have held. And that would have been based on the fact that we were under here. We got above it pre-market. But you could see when it opened, those first 15 minutes worth of price action, it was not strong at all. So we would have been looking for shorts going into the bell. What's MicroStrategy doing? The MicroStrategy actually looks like it's trying to reverse trend, but here's the thing, this could be a trap. So MSTR might be something worth watching tomorrow, but the trade will probably happen pre-market based on NFP. Nobody trades this thing, huh? MicroStrategy's 8% perpetual strike preferred stock. Nobody likes it. Nobody's buying it. It's not really acting like Bitcoin. Damn. So this does not trade like Bitcoin at all. Bitcoin is still closing dailies above support. But seeing this right here, this makes me cautious. I don't think this will trade like Bitcoin until it has more participants. Anyways, I analyzed the whole year, was pointing out bullish reversals that looked better for a long. Yeah, on the near term, it did look much better for longs. Absolutely. Well, it still hasn't yet. So like this comment right here, this is perfect. The key for me was realizing the difference between a bear flag and a slow bottom that became bullish, right? It still hasn't yet. It's only today invalidating the short. It hasn't yet. I'll show you. It's only today invalidating the short, and that's only if you get an upside close above this and tomorrow you get upside continuation. This could be a damn trap. This is the invalidation point. This is your bear flag here. So this is the first day that you've traded outside of it. So you still, I mean, just getting up here has to make you at least say, whoa, whoa, whoa. You know what I mean? Something's changed. But you have not invalidated it yet. This could be a trap. If tomorrow we get a candle that looks like this, then you will still be a bear flag, right? I'm not saying you will get that tomorrow, but I'm saying if it did something like that, that would still be, that would just literally mean that it lured all those people that were looking for this flag to break down into the trade today. So it is not invalidated yet. But literally on the open of the week, which was here, this candle, you could have been a buyer yesterday because you were above. This is your weekly open. Right here. You closed above the 21 last week. So just for the intraday scalp, we would have had a bullish bias on this day, as long as it held at the weekly open. Right? That would have been our trade for the scalp. Just going on for the intraday scalp. But this right here could absolutely be a trap. And we won't know until we get further data. We can look at volume to see if it's like confirming this is a trap. Or not confirming, but at least acting like it. Let's see. No, well, it is. Your point of control is still way down here, but if you trade up here all day today, this volume will build in. And this point of control might migrate up to here at the close. If that happens, then you're going to have trappy-like behavior. So the short isn't completely invalidated for me yet. A close above, and then tomorrow you get another higher daily close. It's invalidated. The pattern is no longer good. It's no longer relevant. The long-term pattern. The very near-term scalps can absolutely be day trades up. You can absolutely be looking for. This is why when I say on Twitter or on X, I have an overall bearish bias, people be like, well, why are you getting long then? They don't understand the way that I analyze price. My long-term bias could be bearish, but I can still 100% look for longs as long as the last 3 days are bullish, right? As long as the last 3-day pattern is showing me that we are closing dailies above the 21 exponential and the 50 on the RSI. Then in that scenario, I can be bullish even if I have a long-term bearish bias. But it's not for a long-term hold. That's just for a scalp, right? My bias on this is bearish. My long-term bias is bearish. But that's going to change because rate cuts are no longer on the docket for the next rate decision in September. So that might change. That might change how everybody was looking at USD/JPY. So as of right now, we're going to go ahead and call this done, right? It's invalidated because we hit the top edge of the range, but we're still trading inside the range. So it isn't completely invalidated yet, but you can go ahead and say it's close enough. and then just wait for that super big bearish blow off move to confirm what everybody else is wondering today. See, the professionals, anybody that analyzes trend the way that I do, and trust me, they're out there. They're out there and they trade big, right? Because how many times have you seen me nail these big ass trades where I just sit in them for a quarter or a half a year? I'm doing the same thing they are. So if you see an invalid, like that will be, in a sense, the market repricing looking for demand. So that would be a buy side exhaustion if you put in a trap up here. Then you best believe people are going to hammer this to the downside because it's still, the overall pattern is still there. You haven't invalidated it yet. It's the exact same thing that happened on GLD. Literally. Right here. Boom. This invalidates the short. Right? Which this isn't a short, it's a long. If you break out, you're looking for upside expansion, the measured move anyways. So the measured move upside expansion on this would have had bullish participants looking for an upside target of 334 if they participated in this trade on this day. They went out there, they bought puts, or they bought calls way out of the money, way out in time, looking for a larger move. And then just go one day further in time, and you can see how this literally exhausted those buyers. Let's put our trend line back on there. Our upside candlestick trend line, because you also smoked that one. So you had two trend lines that major market participants were watching on this, right? Two of them, and both of them confirmed on the close of this day that market participants were looking for a bullish breakout on gold up to, on GLD up to 334. That's a measured move. So people positioned for that on this day, and then look what happens the very next day. Boom. So now what happens? These people that bought in this day are stuck. They are freaking stuck. So what are they waiting for? Well, if they didn't exit on this day, they need a push back up into this candle's range so they can then exit their trade. Otherwise, when they start getting liquidated, it's going to bring on more sell side activity. Boom, boom, boom. So now imagine if you bought those freaking out of the money calls and you've been waiting every day for a pop. You are, not only are you super freaking duper stuck, you've lost probably all that premium. This is what we're waiting on to confirm what may be happening today on USDJPY. That's what we're waiting for. So now we need to see what happens here after today, like tomorrow. Because if it is a bull trap, and they do exist, we've seen them happen so many times, then we will be looking for this. Almost an instant repricing back down through that area. So that way, anybody that buys this today for the breakout, they will be stuck. And that will cause this. So that's what we're waiting for. We're waiting for that. I was trying to catch it before that, right? So my timing was off. My overall pattern and formation is still in. We can go ahead and call it invalidated. So if we don't get the trap like tomorrow, then we know this is probably done. What do we got coming up tomorrow? By the way, does anybody know? Can anybody remind me? Oh yeah, NFP. So don't think for a second tomorrow couldn't possibly put in a candle that looks like this, because it absolutely can, especially with NFP. Yeah, it could in a big way. So everybody today that might be bullet, see, and that would have other ramifications for risk on assets, wouldn't it? Unless the weakness stems from a huge dollar pullback. But if it stems from huge yen strength tomorrow, that will have broader implications for the rest of the risk markets. Because then people are going to be like, well, this is definitely a blow off buy side exhaustion type of trade here. But on the yen, it will be the exact opposite. It will be a sell side exhaustion move. And that would have risk off ramifications moving forward into the rest of the, But that's not what I'm looking for. I'm just looking for the dollar to be range bound. So that way the yen could get a little bit of strength. Not a lot of strength. Just a little bit of strength. And if you remember, I said if you don't want to play this exact short on USD JPY, you could have played it on Euro Yen or Pound Yen. Remember? Well, this is what happened on Euro Yen. Now you're getting this today because of yen weakness. This is yen weakness. This is not Euro strength. Euro USD is getting pimp smacked today. It's not getting pimp smacked as much as it did yesterday, but it got beat up pretty bad based off dollar strength. So that move is it's the yen that's causing it on both the USD JPY and the Euro Yen. So it's the yen that we need to see this. This needs to be like an exhaustion move. If it is today, then we're going to be looking for the year-long trend to come back into play. And there's a big measured move on that. Because this is exactly the opposite of what's going on with euro dollar. With dollar yen, sorry. You haven't even broken out of the bull flag yet. It's more of a channel on the yen, so it's not exactly the same, but it's close enough. So we're going to be waiting to see what we get tomorrow. If you get a candle like this tomorrow, say this thing retraces, let's say it just for shits and giggles, because that's what the markets do, right? You usually put in your entire day's range early, and then for the rest of the day, you pull back off the highs. Or if you're in this case bearish, you'll set the daily high, then you'll make the reprice lower, because everybody that's offsides will get smoked. So you'll run down, you'll set the low of day, and then you'll back off, because that's what they do. So you would have this move would be the fake out move, and then the reprice runs lower, and then for the rest of the day you trade off the low and do that. I mean, that's what happens inside of a day, unless it's a choppy day. If it's a choppy day, then it does this. It stays inside the day's high and low. It doesn't make fresh daily highs or fresh daily lows. It stays inside. It's an inside candle. So tomorrow, if we see this thing open up here and put in a candle that looks like this, my bearish thesis for USD JPY is invalidated. Even if it pulls back into the range, this larger time frame pattern will no longer be valid. I would be looking for shorts here, looking for trend to continue. But I need to see what happens tomorrow, because if I get this, then I'll be a buyer on that. But you won't get this, more than likely. If this ends up being a trap, you will not get a pullback that deep. It will more than likely just have 3 days where it's just like bam, bam, bam. And everybody will have missed it, except us. And the only way to trade it for that is to wait until 5 p.m. Eastern Standard Time today, just to see if you liquidate the high of day for the Asian session, right? Because you open a new daily candle on this at 5, which will be the month of August. See if you set a higher high and then reverse. If you do that, short the piss out of this. Short the piss out of it. So it's not over just yet. Tomorrow, when I wake up, I'll know whether or not it's open or it's over. Either I will eat a stop tonight in bed, or I'll wake up to a huge 60 pip move on the USD JPY lower. We'll see what happens. All right. This trade looks to me like it is not going to work, as it is still playing around with my entry. What does it look like on a 30-minute here? Yeah, this doesn't look good, man. We did take out the midpoint. Okay, so we're still in it, but I mean, be honest with you, if it got back up to hourly res, it would take out the previous hourly candle's high. I don't like that. I want to see this stay inside this, because this candle smoked the midpoint, but it didn't, like it. I don't know. I don't love it. I don't love this short. Bitcoin needs to roll over or something, and it does look like it's going to, so I do like the short. I'll just keep it on. I'll know more next hour. I'll have more data. I'll be able to make up my decision later. I don't have to make it now. And then the bonk trade is in great shape. Like, I don't have to do anything. I'm short on this way up here. We're good on that. We are short on this 4-hour wick right here. So there's no reason, unless this candle ends up looking like this, there's no reason to sweat that short. If you're holding shorts on bonk from up on this wick, you're in great shape. I captured a few XRP shorts earlier this morning, but on the sidelines right now. Yeah, if you're doing those reversal scalps, like if you're watching the 1 minute or 30-second chart, and you're like selling overbought and then buying oversold, like if you're scalping those reversion trades, You definitely want to do that when there's light volume. So like 11 to 1 would be the best time for that. Or like 2 hours after the London session when volume eases up. Yeah, for sure. H bar is up on the day, but pulling back. Let's go look at H bar real quick. Pulling back hard on the day. Oh, that's 30-second. My bad. Oh, it is pulling back kind of hard. I agree. Looks just like bonk. So my short entry would have been put on right when it reversed there. Boom. So I would have been sitting out through all of this because that's 6 a.m. 7, 8, right through here. This kind of reaction, yeah, we would have put the hammer on it. We would have noticed weakness coming into it once we failed to make higher closes here. Even though we wicked up above, closed under, wicked up above, closed under. You got 15 minutes right through here where price failed to close higher than 27791. So chances are I would have caught the short on this candle right in this area. Like this candle right here, as it traded back up into this little block of price. Right here. That's when I would have put on the short. Stop would have been here. Very easy. It's not cherry picked. I literally, for anybody that's just hearing my voice and you want to call it cherry picked, that's the exact same trade that I put on here. The exact same trade. I just simply watched this 4-hour candle's high. Watched this candle's close. Saw this kind of price action come in. And put on the short. Here is that trade right here with live funds. Here's the 5-minute chart. Well, here, let me put that line up. It's not cherry picked. It's exactly how I trade every time. Here's your 5-minute chart. This is the area that I'm watching. That's the last 4-hour candle's high. Above it, I don't want to short it as it's putting in higher closes. This would have been the close to watch. This candle would have told you to no longer look for shorts. That candle's higher than that one. Then this one. You're still not looking for shorts. Then you get a period of 20 minutes. 20 minutes goes by. I'm not shorting the red candles. I want to short in this block of price up in here. So I get it. We do put in a higher close here, so it wasn't the best entry ever. But these 3 closes were still higher. You see what I'm saying? So I just put it on when this candle closed. Short. Blind stop would be there. And I was never in fear of having to close that short out. You see what I'm saying? Like, so I didn't have to short this thing 87 times this morning to nail this perfect entry. It was so easy. Also, look at this stuff. Like, we're burning overbought here. Burning it up. So I'm not like shorting this candle, this candle, this candle, this candle, and that candle, and then finally showing you a winning trade. That's not what I'm doing. I used to do that, like when I first started trading. That's what I used to do when I didn't know what I was looking at. Now I know exactly what I'm looking for. Exactly. If I don't see it, I don't trade it. This candle, this thing's pushing up. Each one of these wicks is a fresh daily high. You can't be trying to short into that momentum. That is bullish momentum. You got to wait for some sort of a top to build in. You got to wait for lower closes on the up pushes. Now, if it would have stayed choppy in here, then I would have likely had to exit the position. But it's not what happened. This one is the one that's threatening me. But this one's been a little bit trickier. Right? Same scenario. Lower close. Okay, I'll take the short. Boom. You barely got a close above my entry here, but then it rolled over. So for now, I'm still golden. But you close above this candle and then this candle. And then I got to start looking at these freaking candles. Up there, I don't want to be short. Because it's threatening. I'm losing money here at this point. I'm losing money. So to be honest with you, since I've been in this trade for a long time now, 9 a.m., it is 11, 2 hours. It has not worked. So what I should do is close this so I cannot lose money on this trade. And then wait and see what it does later. I might miss it. If I miss it, oh well. I tried. It didn't work. Now compare this to bonk, which I am going to close it. I'm not going to let it go against me. This is doing what I wanted it to do. This is what I wanted this to do. Right? I wanted the hype to do the exact same thing as bonk did. It isn't. It's still up 4%. It's still up above this. It is literally threatening a high day breakout. Literally threatening that right now. So this trade isn't working. So we're not going to eat a loss on it. We're going to book $24, $26 right now. So boom. Oh, sorry. Boom. It's closed. It's gone. So if it spikes up here, I'm not going to take a loss. So I made money on the trade. I made $24. So if it ultimately doesn't make a higher close, I can enter it again and risk $24, and that'll be a break-even shot. But there is no point in entering it again. My day is done. That one didn't work. I'm not going to force the issue. I still have $250 right there, and I'll take $250 all day long. You know what I'm saying? I'm happy with it. That's a successful day. I went in the day, I took a couple trades, I didn't lose on any. I made money on every trade I took. Day done, and it's successful. Will it change my life, the $30? Of course not. That's not the goal. The goal is to successfully, consistently generate revenue. I don't have a specific amount of revenue. As long as each trade I take is green, or when they're green, as long as those green ones are bigger than the red ones, I am consistently profitable over time. That's what we're shooting for here. We're not shooting for big gains on every trade. That type of thinking will cause you to lose money. So hype ain't working. We will leave it alone. It's not as weak as Fartcoin. It's down 4.8%, but bottoming. This thing is still up 4% on the day. You are trading at highs of day. This is probably going to break out. Probably. This 4-hour candle is bullish AF. There's 43 minutes left on this candle's close. In order for this candle to not be bullish AF, it needs to close lower than this point. It's probably not going to do that, right? So I don't need to eat a loss on it. The chart is telling me, hey, dude, you're probably wrong on this one, bub. Okay, I'll listen to you. I'll listen to you, chart. The chart, I don't know what you would call them, chart gods with the little g. Listening to the chart gods tell me, I am the candlestick whisperer. Well, actually, the candlesticks whisper to me. They tell me what's what. You know what I mean? I don't whisper to them. I'm not doing some Crocodile Dundee stuff in here behind the microphone with my hands going, making this thing go down, right? I'm just taking opportunities. I'm taking jabs at these things. Jab, jab. Every now and then, my jab is strong enough to lay a motherfucker out. You know what I mean? That's what I'm looking for. Here was a jab, knocked out. Nice. This one pays for that one that didn't work. This one's just a little bit too strong on the jab. He ate the jab and took it right on the chin like a champ. So why jab him again? All right? Leave him alone, man. He's bigger than you. He probably gonna beat you up, dude. Simple things like that, guys, literally will turn it around for you. I used to set, and I was so bad at it, like the world's worst. I would literally lose all my money, like $200, all of it, because I took 75 entries on the same asset, trying to short that bitch. Here, and then here, and then here, and then here, and then I'm out of money, and I'm like, fuck. Gotta wait. Gotta buy some more crypto, so that way I can try it again tomorrow. You don't have to keep living like that. Those days are over. We know what we're doing now. Now we know how to make money consistently. That's why we only make withdrawals. Some people are still just continuously buying cryptos to trade. They're buying USDT or buying Bitcoin and then losing it all and then buying it again. I haven't done that for years. I still occasionally have, though. I'm not even gonna lie. I have blown accounts. Not like hundreds of thousands of dollars or anything, but I blew my account very first day. This was after I was already a profitable trader on weeks. I blew it. I deposited $200 on it, and I took a Bitcoin scalp just to test the liquidity, and I took it with like a 200x leverage. I was in that trade for all of 10 seconds, and I was liquidated. Lost all my money. So I had to deposit more money. And then I never did that again. And since that day, I have been consistently making withdrawals. I love it. Great stuff. Just little hints will help you so much. You'll remember my voice. You'll literally hit a short, get stopped, hit it again, get stopped, and then you'll remember me telling you to stop doing that. Just like that, and then you'll stop. And then you'll wait till the next day. And then you'll start to see your equity start to bottom and then start making its ascension. Once you get to that point, you're good. You're good. Once you can stop that equity curve from just making consistent, fresh lows, once it bottoms, accumulates, and starts its uptrend, you're good. You know now what to do. Pepe looks weak. Yeah, it's only down 1% though, 1.68%. So even if I would have shorted this one, it would not be paying that much because this move isn't that big. Where's the open? Okay, so to be fair, it would have paid me. It's a 2% move. That's generally what I'm looking for. Anywhere between 2 and 50%. You know what I mean? So to be fair, if I would have shorted it up there, that would be a 4% move. So it is a quick mover. My bad. I didn't know where the open was. I thought the open was up here. But no, yeah, it is a pretty quick mover, and it does look weak. Overall, it does look weak. Where is it on July? That's July's that's its VWAP, so that's not great. You're under the midpoint. And versus, oh yeah. Yep. You liquidated the previous week's lows and you're getting downside continuation. So if it would have liquidated it and then got back in the range, I would say, well, not yet. There's still a chance for the bulls to kick in and buy it, pick it back up to last week's high. But that's not what happened. It broke down, closed under, and then you got another lower close, then another lower close. So you're getting continuation as we speak, lower. So yeah, we want to see multiple candle closes today. Today's Thursday, so if it's going to be a bearish week, we need it to get it move on. But we're, I guess, too far down on the weekly range to see that. So that's why it's very dangerous shorting at the lows of the week or the lows of the day. Very dangerous, because at any point this thing can bounce back to the upside. And it happens so often. So often. There's going to be times where you get expanding ranges for both highs and lows. You think it's hard trading just regular intra candle chop? Wait till you try to trade expanding candle chop. When you're trying to trade outside chop, yeah, gets crazy then. Because you set a low, then you go up and set a high, then you set a lower low, then you go up and set a higher low, then you go down and set a lower low. Yeah, when you start doing this garbage right here, just hang it up. Just don't even mess with that. Don't even mess with that. That will destroy even the most patient of traders. That kind of stuff. Okay, CKB looks very similar to Balance. Hang on, I want me to get your first one. SUI. Sui. Yeah, this was one of the strong ones, wasn't it? Yeah. Yeah, this thing's up on the year, broski. Up on the year, still holding the midpoint of July. I mean, it's bullish. The high month close did hold so far, but still, overall structure is still bullish. Now you're losing this last weekly expansion. You're losing that candle's midpoint, but I mean, it's a buying opportunity, right? We don't know that alt season is done yet. So as long as you're structured like this still, we don't want that VWAP in there. Give me that VWAP. Get out of there, dude. Give it here. It still didn't delete. What the? Go away. Yeah, as long as it's structured like this still, you got to be very, very careful, because it looks weak. It looks like the bears have got it, but they don't. They don't have it yet. The bulls are still firmly in control of this asset. This is what we could do, though. So it does look like the last 3 days, the bears have stepped up. Yeah, they've stepped up. Let's see what you got here. Oh, yeah. Yeah, this is the first sign. These are the first signs right here that the bears have got it. They need a lower close. You got 33 minutes on this candle. You might not get it. You need it. You get a lower close with this signature right here. Under. Retest from under is a short, right? So same scenario, exact same setup as I did on bonk and on hype. The bonk worked, the hype didn't. Just watching that 4-hour high, looking for the short after it failed. Would have been in here though. My short, I don't ever chase price. This is chasing. I never chase. Don't ever chase. Because what happens is you're going to be waiting for that up close candle and you're going to short it down here and then you're going to get an up close candle right in your face. You're going to take the short here and you're going to get one of these. Don't ever chase price. Wait till you see weakness. That's a higher close. It isn't until this close that you could have taken the short because it's lower. You could have taken the short in theory on this candle, but I never like shorting those dojis on low pushes. Also, pay attention to something else that is much different than my short on bonk. Look at your structure here. You're not overbought. So this, I wouldn't have shorted it. Even here, I wouldn't have shorted it. Because at any point through here, you can get a volume spike. Like an above average volume spike on one of these candles. And since you're down here, dude, like one volume spike, you could get a candle that looks like that. So this is what I'd wait for to short. I never got it. So it would just melt off without me. It happens. You're going to miss trades. You're going to miss them. That's okay. I would rather close the day out without taking a trade than close the day out red on the day. You have to get to that point. You have to get to the point to where I was. I hated it. I lost so much at the beginning. I got to the point to where I hate losing money more than I like making it. Making money for me happens. It just happens. Because I'm set in my rules. I know what I'm looking for. I know what I'm waiting for. I know how to trade. But for newer traders, they don't have that yet. They still trying to get rich. They haven't given up hope yet, right? You almost got to get to that point, or I did, just to learn this shit. I had to give it up. I had to give up hope and just say, I'm never going to get this. I'm literally never going to get it. Ever. So I had to get to the point to where I was so stingy. I was like more afraid to lose money than I liked making money. It made me more patient. It made me watch price for hours on end and just let trades go and mark stuff out. I still do that. I still do that to this day. I'm always honing my edge. Here's stuff that I did today. Let me pull this one up. And let me pull this one up. Wait, which one is that? That's the wrong one. Where's the other one? Oh, I wrote, okay, this one. That's the same damn chart, bro. Where's the 30 sec? There it is. Found it. Got it. Okay, here we go. This is what I did today. Let me see what you can see. Okay, so you can't see all of this one. So let's talk about this one first. Right? Let's just make it a little bit bigger. So what I'm looking at here is simple. I see this on the volume delta down here. This is the 1 minute chart on Fartcoin, right? You can see that 1 minute right there. This is the 1 minute chart. So on Fartcoin, here's the daily range. That's your daily high. That's your daily low. So we're in the middle, holding that midpoint. But the volume delta shows me that it's weaker than it is strong. But this is the 1 minute chart. Now, if I pull up the 30-second chart, this is what I got. The exact opposite. See where that dotted line is? That's your zero line on Fartcoin. This is showing me strength at that midpoint. Look where we're coming from down here. So I'm looking at this for a buy because we're bullish here. So when we're oversold here, that's when I want to attack the long, and I'm only looking for a 2% move on Fartcoin. So this was right at about 5 o'clock. So let's go to 5 o'clock. Let's pull this data up. This is things that I do. Like when I'm done trading, I got nothing else to do. I look at stuff like this still to this day because I'm trying to sharpen that edge. Now, I posted on Twitter earlier looking for that midpoint to hold. So here's that data right in here. So we want to look. Wait. Oh, no. Oh, over here. Sorry. Here we go. This is what I'm looking for here. So we got this, and on volume cumulative delta, we're structure bullish. So I'm looking for a move up, but it's not a big enough move up, right? So I don't take it. I didn't take the long. I waited for this to hold. That was that midpoint right in there. Here's the image again. So you can see right through here after 5 a.m. it held. It's holding support right through here, right? We're not quite overbought or oversold through here, but it's also holding that 40 line. That's when I posted it on Twitter right here. It's holding the 40 line. So I said, if this will hold, I'm going to look, we could look for this to go up based on that stuff, that data, that info. So let's pretend this is that, right? So I bought it and I exited it when we started making hot, fresh daily highs, because that's what I was looking for. Fresh daily highs. It still wasn't that big of a move. But when I'm scalping like this, I'm just padding my stats. I'm just giving myself more breathing room. I'm not trying to get rich every day. If I can make, $50, $100, $200, $300 every single day, I'm not going to have any trouble. And that's just with alts. That ain't what I'm doing on my main accounts. I got main accounts that I'm doing other things with. But just padding the stats, just building the accounts. That's not a fresh, I need it close to this. So up to the high of day is going to be close to 1%. Not that big of a move on Fartcoin. It ended up giving us a nice move though. Right? Nice move. So when it starts doing this, notice the time. Like it's climbing, we're getting closer and closer to 7, 8 o'clock in the morning, then I know that there's going to be more volume coming in. So I'm going to exit on fresh hive day. So once we did this, I didn't close it out because I'm looking at the P&L, right? I'm knowing I'm not getting the move that I'm looking for. Up into here, though, that P&L is much different. So up in here, I'm out. I got the move I'm looking for. I'm out. I'm out. Plus, up in here, I know sellers are going to be attacking it. Now, to be fair, I almost exited it there. I almost exited. I just got lucky. That is straight luck. There's no skill in that. Because this could have hit here. This is a fresh hive day. It could have instantly went down and took out the low day. So that was just luck on my part. Some days I'm not lucky. Some days I'll take 2, maybe 3 little intra to intra range scalps like this, and I will miss all 3 of them. You know what I mean? That happens to me. It happens to everybody. You're not going to be right on all these. It's just not going to happen. You're going to buy an oversold 30-second or an oversold 1-minute candle one of these days, and you're going to get 10 more that make fresh daily lows each time. You're not going to be setting in that. You're going to instantly get out. You're wrong. The momentum is going. So right here, this thing hit oversold. Boom. Right there. There was not an objective level here. That's another thing that I'm looking at. If there's not an objective level that I'm looking to be a buyer at, I'm not going to buy it. But I'm just showing you how the oversold works. So if you would have bought it here on this candle close looking for a bounce up, back up to hive day, you were wrong. It never came back to your entry. That's how wrong you were. 107.69 would have been that oversold entry. It never came back. Never came back. It never came back. So you got to be careful. But I'm looking at the cumulative volume delta because that's what I want to see here. I want to see. So I'm looking for the long because at that point in time, the cumulative volume delta on the 30-second is bullish. At the time that I took that snapshot, right? 5 o'clock. So over through here, in this area, I'm looking at this because on the 1-minute chart, this is bearish. So I want to see how often this happens. So every time I get this, I'm going to take a picture of it and I'm going to file it. And then after about 2 or 3 years, I'll be able to look back at all the pictures and compare how often did long scalps work once we had a long on the 30-second, but a short on the 1 minute. And if you see that signature in the future, should you even take the trade, right? The only way to get that data is to forward test it in time. But that's just for the scalp. That's the in-between big volume time stuff. You're not looking to put this on at any open. Not at London, not at Asia, not at New York. You leave that strategy alone. Because a lot of times you're going to get big volume at 9:30 and you're going to get downside continuation even when you do print that overbought or oversold. You hit oversold right here at 10 o'clock. Boom. Big move lower. Like, you don't want to be holding long for that. To be fair, though, that's not a legit check of oversold either. It was when the candle was being made, but on the close it wasn't. So yeah. But if you're just looking for a few ticks, because if you're doing this the right way and you're not getting feed to death, if you're getting feed to death, you're doing it wrong. The fees will kill you on strategies like this if you're not careful. You can't use heavy leverage and heavy position sizing. You're just looking for literal base hits. Just if you can hit 3 of those and make $50, $65, $70 on all 3 of them, you've made almost like a little over $100. You do that on a daily basis, your account's gonna grow quick. It's gonna grow. But you gotta pay real close attention to your fee structure. I think I'm using like 6x leverage to do this, not 20. When I'm using 20x leverage, I'm looking for those longer setups. So this is 10x. This is a long-term setup. This wasn't planned on being a short scout. This should say 20. I don't know why it's 10. I was wondering why this seems so low, to be honest with you. I was like, that should be up more, dude. Because I got a nice move. But I'm going to hold it because I think I'm going to get 2, maybe 3 more of these bad boys. Boom, boom, boom today. That's what I want. I don't know that I'm going to get that, but that's what I want. I'm going to hold it. So this will end up paying me big if it does do that. But it should be double what it is right now. Double that easily. This big of a move on bonk. Yeah, that should be a $400 winner. I didn't realize that my leverage slider's on 10. That's a my bad right there. Oh well. That's okay though, it's still free money. It didn't cost me but $1 to take the trade. So as long as I lose less than $3, I will make money on that trade. All right, guys, we're gonna wrap this up real quick. Let me make sure I'm not missing anybody's. CKB, that's the one you wanted me to look at. I'll look at that. If you've got a ticker in the chat, I will look at. What am I writing at for? I will look at it. And then I'll end the stream. So if you're still listening to me and you think I'm wrapping up, just give me a second. I'll get to your ticker. It still looks okay to me as far as bulls are in control. But that daily support's got to hold, right? It's trying to lose it right now. I don't, of course I don't know if it will or not, but I don't like this action up here. Yeah, I mean, your last week was a doji, and this week you're under last week's open. So that means you're under the midpoint of last week's range. This looks worse. But you're still above the July midpoint, which means, at least for the month of July, it still has its gains, which is good. It hasn't given them all back yet. It's working on it though. A lot of these things, a lot of guys will just, if it gets down in this area and they haven't taken profits yet, they'll just get out of it because they'll think that it's probably coming lower. I mean, there's all kinds of reasons why people take profits. There's some people use indicators to judge profit taking moves. Some people use swing lows. I used to just, there's so many different ways you can approach that. I would probably say after, July the 20th, we're putting in those highs, retesting them again on the 25th and failing, and then again on the 28th and failing. And I'm probably getting out of that. Because in all 3 of those scenarios, you had really big rips, and then it failed. Right after the big rip. Big rip, fail. Big rip, fail. big rip, fail. Like, I'm getting out of that. Getting out of it. I'll wait till August. You know what I mean? I'll see what it looks like in August, and then I'll make a decision. UNH, major miss. UNH. Once again. Oh, you're talking about earnings? Yeah, somebody was looking for a straddle on this the other day. I don't know if that paid because it didn't break down below the range lows. And that's what you got to be afraid of on earnings trades when you're doing those straddles. I don't remember who it was, but I know we were in this area. And I remember saying specifically, you need a big breakdown for that straddle because you need one side to pay because the other side of the trade's going to lose, right? The call side is going to get decimated. So you need the put side to more than double in value to cover the losses you incur from the call side. That's why, I mean, straddles are difficult. This was a perfect setup for a straddle. It's been range bound for so long. It's been tightening up. The range has been tightening up. I just don't know if it was a big enough move to make money on the straddle. I hope it did. And I don't know if I'd call that a major move lower either. We can see exactly how big it is. It's a 5% move. And you wouldn't have had to eat the full 5% loss because at some point of that, you were trading above the open. It's not a major, like 20, 30% on a stock. That's a major earnings miss or a major earnings beat. 20, 30%. 5%, I don't know. But yeah, this thing looks bad long term. There's a reason for this. I don't know what that reason is, but yeah, this don't look great. Boom, boom, boom. Big monthly ranges. All three of them heading lower. This is a pullback. That's all that is. Very tight. That is what would potentially make that premium worth putting a straddle on for, though, is that candle right there. That very small monthly candle of June. Was such a tight range in June. Here's your June open right here. You didn't do shit in June. All of June, you did nothing. Like a doji. So right there's the open. There's your June low. So, I mean, from high to low, your range was so pathetic. This was a fresh June high, then it pulled back. It did not make a fresh June low. Then it made another fresh June high. Then it made, well, no, it didn't. It didn't make a fresh June high. That's your July open. So the open of July, you did take out June's high. So June was basically just chop slop. The July is what hurt the earnings trade, I think. This push lower. If July would have also been sideways and choppy like that, that would have been a beautiful straddle trade. It just didn't play out that way. So your Bollinger Bands at this point right here, this is when you're going to see them start to open, because that's the first like real expansion. You see that? How it goes, the red goes up and the green goes down. Because volatility, when volatility expands, it expands in both directions. It doesn't just expand up. It expands both ways. So your puts will also, the premiums will also increase because of that volatility expansion. But that's for options and everything else. But that is really kind of what, if you didn't make money on that, that's the reason why right there. because you got the volatility expansion on the upswing, and then you spent the rest of the month just slowly rotating lower, keeping the volatility expanded, not allowing the volatility to get tight again. Because once you expanded from this point, you never tightened up. And then it just slowly started expanding wider and wider. And then when you did the earnings, your volatility was already... So this trade probably didn't make money. Which if you're going to put on straddles like that, you're literally buying the premium on both sides of the market. You're buying a call at the money, you're buying an at the money put. Same strike, right? You want your Bollinger Bands to be pressing in. Like this. And you literally want to keep it like that until you get right to earnings. Because if it starts to expand before the earnings, that's going to get priced into that premium. And that's what happened here. This swing caused your volatility to expand. And then it kind of just did this. Until you got to here, this day caused it to expand. And you just kind of, you know what I mean? And then here's the earnings. So you took the earnings after the expansion already started. But it was still tight enough in the range where I said you could take it. Just please understand the risk. I think the total risk on that trade was like $2,500. That's if you lost all the premium. And there's no way to lose all the premium because you are also taking the put side. Hopefully it made money. Yeah, we did look at Pepe earlier. I mean, it's doing the same thing. It's doing the same thing that Hype is doing and Bonk and everything else. Well, not Hype. Hype did roll over, by the way. So here you go. I missed this. Oops. Oh, well. It happens. Right? It happens. I missed it. It never did get back up there. That was my entry. I took my entry right at the line. So it is what it is, guys. That's going to happen. It's impossible to know if it's going to go up or down. But yeah, Pep is essentially hit daily lows and is bouncing. You're probably going to see that for the rest of the day. I would love to see another round of lows. Otherwise, I'm not going to get my 2 or 3 4-hour expansions that I want. That's literally what I want to happen on this one. I want to see a couple more 4-hour expansions lower. I hope that happens today, but I just don't know that it will. This pattern supports my thesis. The fact that it's chopping at the lows is a good thing. It means people did try to buy this swing low and this swing low, and eventually those people are going to have to exit because price is not trading away. It's literally coming back. So it looks okay for downside continuation, but there's no way I would open a fresh short down here. Let me just say it like that. Thinking to de-risk on my small Litecoin hodl position. Could you give me some guide? Yeah. Now, this is not financial advice. All right. I do not have a license, so I can't give you financial advice. I can't tell you what to do. I can tell you what I would do if I was holding Litecoin. So yesterday on Litecoin looks okay, right? It's a bullish engulfing daily candle at support. Now, to be fair, it's a support after the breakdown. Your lowest daily close is always support until you get a lower close. Then that will become support, right? But you did opened a fresh candle, made a lower low, and then you took out the high and closed up on the highs. That is a good sign if you get continuation at a big support. It's not a big support. It's just a daily close. It's pretty close to a weekly low, which is a bigger potential support. So here's what I would do. So I don't know where I bought it, and it don't matter, because yesterday, if I was willing to set in it when it put in that low, well, then I would still be willing to set in it until price threatens that low again. So if price doesn't threaten this low again, then I would sit in it. I would hold the trade long. If price holds here today and starts to rally in the next coming days to weeks, I would just leave it open. I would allow price to trade very far away from this point, and then at that point, I would set a stop loss right under that low. And that would essentially tell the market, hey, I want to set in this long, so please go up. But if you don't go up, I will let you stop me out. I mean, when you put a stop loss in the market, that's what you're telling the market. Come get me. Come get me. I dare you, right? That's why you very rarely ever see me put them in. But anyway, I mean, I do put them in. I just, not when I take the trade. Because when I'm taking the trade, I'm not taking the trade when volatility's at its highest. We're literally at low volatility. When volatility is up in the 20s, you can bet your bottom dollar my ass is taking trades with stop losses at the same time. Volatility's on the lows. Right now, we're very slow, small daily ranges. And when we're trading like this, I can withstand a little, 5-minute spike. But when volatility's up, you never, ever do not enter a position without a stop loss going in with you. So that's what I would do on LTC. I would just move my stop loss up to yesterday's low because you sat in the trade at yesterday's low. You didn't close it. So I don't care where your entry is. Yesterday, when it made that low, you did not think to yourself, hey, this hurts too much, I'm getting out. So clearly, you don't mind price getting that low. So just move. I would just take my trailing stop loss and set it right under this candle's low. That's all you can do. Clearly, if it comes down and stops you out and go, you're going to get mad, and you're going to be mad at me because I'm the one that told you to do it. But I promise you, I can't see into the future. So, I mean, that's what you have to work with when you use trailing stops. You're occasionally going to get wicked out, and then price is going to go in the opposite direction. Just get used to that happening, because it's going to happen. It's going to happen a lot. There's nothing you can do. There's no analysis in the world that'll tell you when that's going to happen, right? Nothing. So that's how I would manage it. I would just simply throw my trailer out. Just sniping targets. I get it. It's fun. It's fun. Oh, wrong screen. Am I? Oh my God. Thank you. This low. Sorry. This low. Because yesterday you didn't exit. So you've been in the trade. Let's just say your entry's down here. You let it run up to these highs. If you didn't take profits, well, you've since seen your P&L get smaller and smaller and smaller. And then yesterday down here at these lows, you weren't in enough pain to exit the trade. So if you can handle your P&L being down there, then put your stop loss up to there, 105.38, or put it right under it, like 104.40 or something like that, just right under. Because if it did hurt, then you definitely want it there. You don't want to lose more than that, right? You want to protect the gains. And it's not these gains. Forget about them. Forget about what your P&L was when you made that high. Because you may never make that high ever again. There's no analysis that will tell us what this will do. That's not how trading works. That's not how investing works. So just move your trailer up to that. When we take an entry, this is what we know can happen, right? Let's say I buy it here. I know for a fact price can do this or this. From the time I enter the market, this is my risk. And it expands as time goes on. That is the only thing we can be certain of. That is it. And it doesn't have to expand. It can literally stay sideways for months. But we know that as time goes on, price will move this way. We just don't know if it will go up or if it will go down. And there's no analysis in the world that will tell you what it's going to do. Nothing. Technical analysis, all of them. All of them. I don't care if you're using GAN. I don't care if you're using Elliott Wave. I don't care if you're using YCO. I don't care what brand of analysis you're using. None of them will tell you which direction price will go. So you just have to mitigate your money. That's all you have control of. So forget about price ever being above this day's. Forget about price ever going above this point right here, where you are right now. Because that's all that matters. All you're trying to do is manage money that you put in the market at 95.59 to where the price is today. So however much money you have right now on your unrealized P&L, you just have to figure out how much of that are you willing to lose. It's a spread, right? It's a spread. It's a spread from your entry to where price is trading right now. You just have to determine, okay, when do I want out? That's the question you have to ask yourself. How much money do I want to make on the trade? Because right now you can make more. You can make the max amount that you can make on the trade is what you have right now. That's the most you can make. Because once you put that trailing stop out, that becomes the most you will make. Unless price goes higher. And none of us know if that will happen or not. So you just have to figure that out. As far as technical levels, there's the yearly opening range right there, about midpoint of if this was your entry. I'm not saying it is. I'm just using this as an example to show you literally how we manage our money as traders. That's how. That's all we can do. We cannot expect it to go higher. So you just have to do the math and figure out what is the amount that you no longer want to lose, and then set your trailing stop at that point. And you don't want it to be red clearly because you're in profit. Never let a green trade turn red. Say it 1,000,000 times. Beat it into your head. Tell yourself that. When you go to sleep tonight, when you close your eyes, you turn the light off. Don't say it out loud because you might be married. You might have a partner next to you. Do it in your head. Never let a green trade turn red. Never let a green do that over and over. Because by you allowing a green trade to turn red, you're literally saying, you're being greedy. You're literally saying, I think I'm going to make more money, so I'm going to hold out for that. Well, that rarely happens to retail. Usually it's the opposite. Retail usually loses a shitload of money. They never make money. You know what I mean? So managing profit is so easy. It's so easy, but people fail to do it because they have hope and expectations of making way more. And that's why they fail. They are expecting for some random miracle to happen. And we don't know that that will. Alt season could literally be over, and we won't know that until in the future. And you know how we'll know that alt season is over? When we are no longer positive on the year or the month. We'll know it's over. Like, that's what I'm saying. Fartcoin's letting us know right now we could literally be done. To be fair, you could say alt season started here, right? Because you got a big monthly expansion and it's been done ever since. Pretty much. Unless it goes higher, then we'll know it didn't end. There's nothing in the world that's going to tell you what price will do. That would be cheating. It would be inside information. I mean, if you were nailing 100% on your trades, you would probably get a knock at the door by the feds. Like, how are you cheating, bro? No, I'm kidding. But yeah, sorry. I do that all the time. Wrong screen. Just figure out how much money you want to make on that trade and then set your trailing stop at that point. And then that way you can forget about that trade. You never have to worry about it again. Hopefully, you never get triggered on your trailer, and hopefully you open your computer one day and you're a billionaire. I mean, I'll pray for that for you. I would love for that to happen to every single one of us. Right? We just enter long and never have to worry again. We're just constantly make money every single day forever. But unfortunately, that's not going to happen. The people that make money are the people that make money. When you be greedy, you usually lose money. So it's about taking the profits when you have them and then doing it with a repeatable process, right? Do it again, or whatever you did last time, do that again. Because you made money, so you did something right. You just have to figure out what that was and try to do it again. But here's the thing, and this is what I would like myself, not a money manager. You're getting ready to open August tomorrow. This is the last day of the month for every one of these assets. So we literally these things could be getting bought up right now. Whatever makes price go up could be happening right now, and we would never know. There's nothing that's going to tell us that that's happening. We just have to wait for August to open tonight and then see what happens through the month of August. If we continuously put in lower highs and lower lows, well, some of these things are going to get killed. Some of them might not, but some of them will. Fartcoin's already been murked. You've already given back all of July. It's the only one that I know of that has. It's the only one on my watch list that has given back all of July's range. LPT's close to giving back all of July. We know Hype hasn't. Bonk hasn't. Pepe hasn't. Bitcoin hasn't. Fartcoin has. Jasmy hasn't. W hasn't. Bonk hasn't. Penguin. Boom, boom. All of them still look okay. Total still looks great. What we don't want to see is this thing freaking open and just start heading lower, as that would suck. That's a meme, right? Yeah, that can happen. We know it can. We know it can. We've seen it happen. a red candle like breaks the bottom out of my desk sometimes. I hope that happens on bonk right now. I would love to see one of them red candles just boom. Love it. All right, you guys have a fantastic rest of your day. Make sure you all trade safe, trade smart, and as always, happy trading, everybody. We'll see you tomorrow morning. Hopefully, my stomach feels better. All right, we'll see you then. Make sure you guys trade safe, trade smart, and as always, happy trading.